Hey there, welcome back. Running a veterinary practice takes a ton of skill, grit, and heart, but when it comes to the financial side, that's where things can start to feel overwhelming. And if that's where you're at right now, you're in the right place, and you're definitely not alone. I'm Cassie Sykes, enrolled agent and founder of Greener Pastures Income Tax. Each week, I go live to break down the financial side of running a profitable, sustainable veterinary clinic without burying you in spreadsheets or jargon. Why do I share this stuff for free? Because financially healthy veterinary practices lift up everyone, including you, the owner, your team, and most importantly, the animals you care for. Truthfully, these weekly lives help me stay grounded too. Oh, hang on. Sorry. They keep me connected to the incredible community of veterinarians and practice owners and remind me we're all growing together. So each session is packed with actionable strategies to help you manage cash flow, increase profitability, and make stronger, more confident business decisions. If you know another vet who could use this info, tag them or share this video. Even if you're watching the replay, I'll see your comments and respond. Let's get into today's topic, big income. Here's how President Trump's one big beautiful bill is your best tax advantage yet. This new legislation has the potential to be a game changer for high earning practice owners. And today I'll break down what's in it, who it helps most, and how to make the most of it. Give me just 1 second. Let me get this going correct. I'm Cassie Sykes, enrolled agent and founder of Greener Pastures Income Tax. For over 20 years, I've been helping business owners and individuals cut through financial overwhelm, understand their numbers, and take control of their tax situation with confidence. As an enrolled agent, I'm licensed at the federal level by the U.S. Department of the Treasury, which means I can represent taxpayers in all 50 states, from straightforward tax filings to high stakes audits and in depth strategy sessions. I work with clients to simplify the complicated, resolve what's messy, and build stronger financial foundations. I'm based in East Texas, where I live with my husband and our two teenagers. And honestly, navigating IRS rules is often simpler than keeping up with teen moods and schedules. But I've learned that clarity, consistency, and the occasional laugh can make even the most complex systems easier to manage. So, with that in mind, let's jump into today's topic. It's a big one. You'll definitely want to stick around for this. So, I've spent over 20 years helping business owners, especially veterinary professionals, keep more of what they earn through smart accounting, strategy, and tax planning. And one thing I want to make clear today is the One Big Beautiful Bill, or the OBBB, is not just political noise. It's one of the biggest opportunities we've had in years to lock in massive tax savings. But it's not automatic. You need to understand what's in it, how it works, and what moves you should be making before the end of the year. Today's topic is something every high income business owner needs to hear, especially if you're trying to build wealth, reduce your tax burden, or simply stop handing over so much money to the IRS every year. We're talking about the new tax law that was recently signed into effect, nicknamed the One Big Beautiful Bill, or OBBB. Now, I don't care where you land politically, love Trump, love President Trump, or hate him. This bill has massive implications for high income earners, and you need to understand how to use it before the window closes. If you've got a veterinary practice, another high income business, or even just steady W-2 earnings over six figures, what we're about to cover could easily save you thousands or even tens of thousands this year alone. So the One Big Beautiful Bill, let's call it OBBB, was signed into law in early 25. That's not correct. It was mid 25. It was July 4th, I believe. And includes targeted tax relief for high earners, small business owners, and families. Here's what's in it for high income business owners specifically. The QBI deduction has been extended permanently. Bonus depreciation is back at 100% through 2027. Marginal tax rates have been locked at 2018 levels until 2030. The estate tax exemption is staying high. Oops. Sorry. Yeah, estate tax exemption is staying high and indexed for inflation. And a new growth investment zones allow for zero capital gains on qualifying assets, along with expanded deductions for pass-through business owners who hire and train you as employees. Does that sound good? Most of it is, but here's where most people mess this up. They don't act. So let's break this down one piece at a time. So the QBI deduction extended and expanded. The 20% qualified business income QBI deduction was originally part of the 2017 Tax Cuts and Jobs Act, and it was scheduled to expire in 2025. The OBBB makes it permanent, but that's not all. It also raises the phase-out thresholds for professional service providers, giving more business owners access to the full deduction. So what does that mean for you? If you're a veterinarian, lawyer, consultant, or run another specified service, trade, or business, the income phase-out range for the QBI deduction is now significantly wider. 150,000 for joint filers and 75 for single filers, indexed for inflation. This means you can have more income before the QBI deduction completely phases out, allowing more high-income earners to benefit from the deduction. The phase out itself begins at a much higher income levels, over 394,000 for joint filers. So many service business owners can still qualify for at least a partial deduction. That means you can earn more than before and still qualify for the deduction. But here's the catch. You still need to structure your business properly, especially if you're an S Corp. Your salary to profit ratio plays a huge role in whether you get the full deduction. And if you're still operating as a sole prop or general partnership, it might be time to look at an entity change. This one deduction could be worth tens of thousands of dollars a year, but only if your income is structured the right way. The next is bonus depreciation. It's back at full strength. So starting this year, you can once again write off 100% of qualifying asset purchases in the year you place them in service. That includes equipment, technology improvements, certain vehicles, even some used assets if structured properly. So this is a major win for practices doing renovations, expansions, or upgrading their diagnostic equipment, but it's also time sensitive. 100% bonus depreciation only lasts through 2027 and then phases down every year. So if you've got major purchases coming up, don't wait. Time your investments smartly and make sure you're claiming them correctly in your books and tax returns. This one's a bit more subtle but powerful. So the OBBB locks in the lower marginal tax brackets that were originally part of the 2017 bill. That means the top bracket stays at 37% instead of jumping to 39.6. And every income bracket below that keeps a little more money. So why does this matter? It creates a longer runway for Roth conversions. It gives you more room to defer income while keeping tax liability predictable. And it's a gift for business owners trying to shift income between years strategically. But don't sleep on this. If you're sitting on pre-tax retirement dollars, this is the window to move them while rates are still low. Also, for those of you thinking long-term, the OBBB also locks in the high estate tax exemption with inflation adjustments. So that means a married couple can currently shield over $28 million from estate tax. This changes how we think about trusts, gifting, and ownership structures. If you're building generational wealth, either through real estate, a growing practice, or long-term investments, this piece is huge. But again, the key is to plan now. Use the high exemption while it's available. Start transferring assets strategically. Here's a new one. The OBBB creates growth investment zones. If you invest in a qualifying business or real estate project in one of those designated areas and hold the assets for 5+ years, you pay 0% capital gain when you sell, zero capital gains. So think of this like the Opportunity Zones 2.0, but with fewer hoops to jump through. If you're looking to build wealth and do it tax efficiently, These zones should absolutely be on your radar. So this bill is a once in a decade opportunity to reset your tax strategy, but here's the problem. Most business owners won't do anything with it, or they won't do anything with it until it's too late. Most will wait until next tax season. They assume their CPA will handle it. They don't realize that most of these benefits require proactive planning before year end. So if you've got big income and you're tired of paying a big tax bill, this is your moment to act. If anything I said today made you pause and think, wait, am I taking advantage of this? Then let's talk. We offer a free profit and cash flow analysis where we'll take a look at your numbers, walk through your current tax position, and help you identify which of these benefits you could be using and how. There's no pressure, just a chance to get real clarity, practical strategy, and a fresh look at what's possible when you stop relying on reactive tax prep and start planning with intention. If you're ready to understand how these new changes apply to your business and whether you're truly structured to take full advantage of them, a diagnostic call is the best next step. You can head to the link below and grab a time that works for you. The link on the slides will be the link below. We'll walk through your numbers, show you what you're missing, and help you put a real plan in place. So the one big beautiful bill just made it easier than ever to lower your tax bill, write off more expenses, preserve your wealth, and build long-term financial security. But it's only if you're willing to take action. So next week, we're going to go over another breakdown of what's changing, what's working, and what you should be doing right now to get ahead. And again, book a call if you're ready to stop overpaying, and start planning smarter. Before you go, I want to share an incredible resource designed to elevate your veterinary practice's financial success. I put together a free ebook just for you called 7 Financial Strategies. Inside, you'll discover practical steps to increase profitability, improve cash flow, and make smarter financial decisions for your practice. You can grab your free copy in the comments. Thank you so much for tuning in today. If you found this helpful, like this video, share it with other veterinarians. If this is something you want to implement in your own practice, don't forget to book your free call. I'll send you the info you need to help you do it right. And I'll see you next week when we dive into another strategy to help you save on taxes, boost profits, and run a stronger veterinary practice. I hope you have a great rest of the week and see you next week.